Are you a veteran or active duty service member and on the hunt for a home? Have you heard about VA loans? And if so, you may be having concerns about the minimum credit score requirements you need to get approved. Not to worry. I'm going to walk you through everything you need to know about the minimum credit score required for VA loans. And the truth is, credit scores play a major role in most loan approval processes and can impact your interest rate and other loan terms. And I'm going to explain why and how exactly it affects you. So sit back and get ready to learn how to qualify for VA loans that you deserve. Welcome back to the channel. I'm Andy from Credit Sage, and we're your go-to partners to get your credit in tip-top shape. With over 3,000 reviews and a 4.9 out of 5 Trustpilot rating, you can trust that we'll help you get on the clear path to your dream home. And in this video, I'll be bringing you some extremely valuable tips on VA loans and where they meet your credit score. Don't go anywhere. You don't want to miss this. So, you probably already know this, but let's revisit it just in case. What exactly is a VA loan? A VA loan is a type of mortgage loan that's available to veterans, active duty service members, and their spouses. Now, VA loans can be used to purchase or refinance a primary residence. Now, these loans exist to help veterans, active duty service members, and their spouses become homeowners. Now, these groups may be facing unique challenges when it comes to obtaining a mortgage loan, such as a lack of funds for a down payment or difficulty meeting strict credit requirements. And VA loans were created as a way to make home ownership more accessible and affordable for those who have served their country. Now, the U.S. Department of Veteran Affairs backs these loans, which means that the lenders can offer more favorable terms and conditions to qualified borrowers. Now let's take a look at some of these benefits. One of the main benefits of VA loans is you can get 100% financing. This means that you don't have to put down any money for a down payment, which can be a huge advantage for first-time home buyers or those who don't have a lot of savings. Another key benefit is that VA loans have no mortgage insurance requirements. You see, most conventional loans require private mortgage insurance, PMI, if you put down less than 20%. But VA loans don't have this requirement. You can save a ton of money over the life of the loan. VA loans also have flexible credit guidelines as well as competitive interest rates. You see, because VA loans are backed by the U.S. Department of Veteran Affairs, lenders can offer lower interest rates than they might on other types of loans. Once more, borrowers get the chance to preserve their funds during the loan term. And finally, VA loans offer a streamlined refinancing process. If you already have a VA loan, you may be able to refinance it using a VA interest rate reduction refinancing loan, an IRRRL. Now, this program allows you to refinance your existing VA loan with minimal documentation and no appraisal, which can save you time and money. Now, VA loans are just one way that the government supports veterans and active duty service members as they transition to civilian life, hence the benefits. Now that we've refreshed our memories on what VA loans are, let's dive deeper into the requirements for qualification. Now, before we look at credit scores, there are some other things that decide whether or not you can get a VA loan. So, firstly, you must have served a minimum period of active duty service, depending on the era in which you served. If you're on active duty, you may be eligible if you've served 90 continuous days. If you're a veteran, you may be eligible if you meet length of service requirements. Now, these requirements generally consist of 90 days of service in wartime or 181 days in peacetime. Also, your discharge must be under honorable or general conditions. You need to have a stable and sufficient income to meet your monthly obligations, including the mortgage payment. And additionally, if you're the surviving spouse of a veteran who died while in service or from a service-connected disability and you haven't remarried, you may be eligible. And then finally, you must obtain a certificate of eligibility, a COE, from the VA to prove that you meet the eligibility requirements for a VA loan. This is a document that verifies your eligibility for the program and is required to apply for a VA loan. Now, let's look at credit scores, okay? Now, I said earlier that VA loans are flexible when it comes to credit requirements, and I'll tell you why that is. The VA doesn't issue the loan, so it doesn't set a minimum credit score requirement. Rather, their job is to instruct lenders to make sound judgment. So, what exactly does the VA do? Well, the VA oversees the program and guarantees a portion of each loan in case of default. Now, private lenders take on the duties of issuing loans and enforcing a minimum credit score. So most lenders settle on a score of about 620. But beyond this, there's no official minimum requirement. What does this mean to you? Well, it means your score doesn't have to be perfect. And if you do have a lower score, you may still be able to qualify for a VA loan. Again, it varies from lender to lender, so you might have to shop around. And while some lenders give the green light to lower scores, they could call for additional scrutiny. So overall, in general, it's best to aim for higher scores, even if you have that minimum requirement. This is because the higher credit score can attract certain benefits. The credit score requirement helps lenders evaluate the risk of lending money to a borrower. A higher score shows responsible credit use, indicating a lower risk of defaulting on the loan. So, as such, lenders are more likely to give their approval, and you can enjoy lower interest rates, helping you cut down loan term costs. So, if you're looking to improve your credit score, there are several steps that you can take right away. However, before we get into that, if you don't have the time to handle this, or perhaps it's too complicated for you, that's okay. It's a lot to take in. We could take the stress out of credit management for you if you hand it over to us here at Credit Sage. Our team of experts, they know all the red flags to look out for and how to make the necessary improvements. So you can just give us a call with the number that I'll leave in the description below and let us take care of everything for you. But if you do want to boost your credit score yourself, here's a few steps that you can take right away, which is pay your bills on time. As simple as it sounds, payment history is a critical factor in determining your credit score. Late payments can hurt your credit score, making it harder to qualify for credit in the future. Relying too heavily on credit can be a red flag for lenders. So try to keep your credit card balances low to improve your credit utilization rate. This is the ratio of your credit card balances to your credit limits. And a target to shoot for is about 30% to help boost your credit score. Also, you can limit your new credit applications, especially if you're planning to apply for a mortgage soon. Each credit application can lower your credit score temporarily, but still lowers it. Fourthly, you want to review your credit reports for errors and dispute any inaccuracies promptly. These inaccuracies, which shouldn't be there, can harm your score and make it difficult to obtain credit or get favorable loan terms. And you're entitled to a free credit report every year from each of the 3 major credit reporting agencies. So take a look at that, comb through it, find those inaccuracies, and dispute them right away. Try keeping old accounts open, even if you don't use them. This can help improve your credit score by demonstrating a lengthier credit history. So closing an old account can affect your credit utilization rate and decrease the average age of your accounts, which ultimately can lower your credit score. Lastly, consider a credit builder loan or secured credit card to establish a positive credit history, particularly if you have poor credit or just a limited credit history, and those can help you tremendously. And I want to say all of these steps really revolve around good financial habits, which ultimately is what lenders really want to see. You'll strengthen your credit report and you'll ultimately raise your score in the process. You got to look at the big picture as you do this and remember to be patient. Now again, if this seems like a lot, I understand. You can always reach out to the professionals like us here at Credit Sage. And our service offering includes a phone consultation, which you can talk to an expert and get you a quick rundown of your credit situation. And it only takes a few minutes to sign up. And from there, the task of managing your credit is off your shoulders. So you can sit back and let us get you the score that you need, setting you on the path to your new home. Once again, if you found this video helpful, please show your support by hitting the like and subscribe button. And check out our channel for new videos each week. Thank you for watching.